last couple of weeks, most analysts, including yourself that we spoke to, they have shared a bearish outlook on the market. It was seasonality, froth in the broader markets, valuation discomfort, many reasons, they have shared for their outlook. But, and actually, to your credit and their credit, the markets have corrected. They have corrected quite a bit. But this week, I think the arguments are getting more balanced. The bears are saying that the valuations are still looking expensive. The bulls are saying, there are enough local tailwinds to keep the market from, seeing a major crash. Which camp are you in, sir?
So I think, first of all, good morning, Suyash. My sense is, see, why the markets are falling, and yesterday why we had a big fall, is because we have been talking to many clients, many funds, institutions. I think the most important thing which came out from our discussions is that follow-up buying is not coming in. So even a small bout of selling is sending the markets down quite significantly, and that is exactly Suyash what has happened yesterday. We saw TCS coming down. The markets did not like the idea of that OFS at all, and I think the stock got beaten down yesterday. And I think across the board they were selling because there was no significant buying either by the funds or typically the institutions. I think some amount of index buying was done, but clearly the broader market is showing a lot of weaker signs. In fact, if you look at the mid caps, small caps, the SME companies, I think they have corrected significantly, and I think things are not going to change dramatically after the SEBI kind of order that there have been some misgivings in most of the SME companies. In the smaller and mid cap, valuations have taken off, stress test by mutual funds. I think the markets have become a little alert, and as you rightly said, unless and until we don't see a very strong fund buying based from the FIs and the domestic funds, I think the markets are going to remain weak. I think we may one should not be surprised that we could even see lower levels, considering the fact that now with the election date announced, you're going to see a lot of volatility entering the markets. Typically, when the election schedule starts, you're going to see volatility both on the upside and on the downside. People will not look at fundamentals, but they would look at obviously election data points. So my sense is that I think investors need to be very careful, be very selective. It's not that it's the end of the road for the Indian bull market, but I think over the next say 1.5 months, the markets are going to remain lackluster. And most importantly, March, Suyash, as everyone is aware, is a month where a lot of adjustments happen. People file their returns. So at least till the end of March, I don't expect a kind of a major recovery. In fact, before the expiry this week and the monthly expiry, I think you could see a lot of volatility in the markets. So I think one has to be prepared for this. But yes, selective buying, obviously, if somebody has a contra view and the patience to hold on for the next 3 to 4 months, I think the best opportunities will come, ahead of the election, because this is what actually happens every time ahead of the election.
All right, and Avinash, to your point, I mean, there is clearly a seasonality effect. I mean, March is the time when, a lot of investors and traders, something called tax harvesting, they book profits, actually losses in positions, certain positions to reduce their overall tax liability. That is, of course, there. And even I was looking at the price chart just now, 20th March last year was also where we kind of bottomed out. If we are to rally from here on, if we are to repeat history, maybe that, once March is done, maybe we get the markets take off once again. So seasonality factor is of course there. But moving on, of course, the big event to track now is the US Federal Reserve policy decision. And I think at this point, sir, no one is expecting a rate cut. But I mean, of course, the inflation data has been rather heated over there. Like it's come slightly hotter than expectation. But what's your expectation? When will that first rate cut come? And more importantly, do you think that it will be a standalone rate cut, or we'll see a series of rate cut? Because that could happen, right? A standalone rate cut just to please the markets.
I think, Suyash, the Fed is definitely very clear that unless headline inflation comes down, they will not start the rate cut kind of signaling as well as the implementation. So I think this first rate cut which you said that to please the market they could give a rate cut. I don't think anything of that sort is expected. My sense is that we'll have to wait for a couple of months, and once data points and inflation are very clear, then I think the rate cuts could happen. I think we are in March, so I think my sense is that possibly from the month of June, the first rate cut could happen. And once it happens, Goldman Sachs itself has pointed out in their recent research report that they could expect not two but 3 to 4 rate cuts. So I think rate cuts could happen dramatically. So I think the markets are definitely looking at this as a major trigger. I think in this policy which comes out, I think markets should look at the commentary from the Fed governor. I think what is the thought process? Clearly, I think another couple of months, and I think this could be a reality. So I think we are very near to the rate cut. I think it will definitely happen, but we'll have to probably wait for 1 or 2 months before the process starts. But I think it's definitely expected to happen. It's not that it would be delayed for a long period of time. And I think that is something which is going to comfort the markets, hopefully in the next 2 to 3 months ahead.
Good morning, Mr. Gorakshakar. Now, infrastructure leasing and financial services has been in the news. They have approached the NCLAT to restrain 11 public sector lenders from initiating proceedings to paint it as a willful defaulter. INFS is one of the oldest landmarks in the iconic Bandra Kurla complex. 2018, it fell off the radar with a 91,000 crore default. Some of their subsidiaries are still listed and traded, not doing very well. One of them, of course, engineering and construction, did give 117% returns the last 1 year. Now, what does it take for a giant as big as INFS, which was so much in the news, right in the forefront of activity till about 5 to 6 years ago, to redeem itself? Is it even going to happen with infrastructure being one of the mainstays of this government and probably the next? Or they will have to come back in a different avatar, if at all?
I think it's a very difficult question to answer, honestly, because a lot of news has flowed after the default which happened with ILFS. But I think one thing is very clear that regulators as well as policy makers who are appointed to take charge of this entire process, the decision making has been pretty slow. So my sense is that this institution needs to now clean up its balance sheet, has to attract more fresh capital, and I think has to obviously have a new management team, some new blood, which could actually reinforce confidence in the markets. It's a very old institution which has done commendable job, but I think somewhere things went wrong, and I think now to recoup it, obviously the need of the hour is either it comes out in a new avatar, or maybe the existing structure has to be recapitalized by fresh money, a new management team, and obviously a kind of a reassurance and some commitment from the management side. I think unless that happens, confidence in ILFS is not going to come back that soon. So I think for the government and as far as the regulatory agencies are concerned, I think we'll have to wait and watch what is the next step to be taken. But this willful defaulter tag is something which I think has to be debated. One really doesn't know what is the current status, but I would be more convinced that the government would definitely do something which could recoup the process of reconstruction, and possibly we could see a new company emerging out and possibly fresh capital infused in the company. So I think we'll have to wait and watch for some time. We cannot comment on this as of now, but yes, things if they have to improve, they will have to take some major decisions to ensure that continuity happens, and all the banks who have got money stuck up here are paid on time.
All right. And sir, before we let you go, we have to talk about oil, because that has been creeping up slowly on us. It's up almost 6% in a matter of a week, and at a 4-month high now, $87 is where Brent crude is at. Of course, it's bad news for us. We are net importers. It's essential raw material for a lot of industries, so input costs would go up. But are we in that uncomfortable territory now?
No, Suyash, I think these oil prices have been rising. I've been reading that possibly because of Russia's supply constraint. Russia has not been supplying adequate oil. So I think, we'll have to wait and watch. But yes, this is definitely a worrisome sign. If crude goes up further by, say, 5 to 6%, then the first hit is going to be taken by the oil marketing companies, and then obviously by all the importers, who are dependent on crude-based products, specifically companies like lubricants, typically chemicals, paint companies. So obviously that is going to hurt their margins if this rise continues and we see another 6-7% increase. Oil had been soft for a long time. In fact, that is definitely not good news for inflation also, because if oil spikes up, then overall WPI inflation also gets impacted. So we'll have to wait and watch. I think it definitely now remains to be seen how global oil prices behave. But I think around 82, 83, if it settles down, then I think we should be comfortable. So we'll have to wait for at least a couple of months before we could take a conclusive call that now crude is again going to see further new highs.